My dear traders, welcome to this new video. We are in the video number 3 of the series of 4 reasons why traders keep losing their prop trading challenge. So in this video, I'm going to talk to you about having unrealistic expectation. In the first video, I told you about the importance of a strict risk management strategy. Then on the second video, we spoke about the importance of discipline. And now I want to talk about the expectation. This is something that is not commonly discussed out there, and you will not find many videos talking about the expectation, but for me this is a very important topic because I speak to many traders and I don't want to take only some information from the internet. I actually talk to people, and many times you will find beginners with a very fairly new track record telling you that they are expecting to pass the challenge in 1 week and making 20% a month and scaling up every 2 months and reaching the 1 million this year. And then you speak to them after 6 months and they even didn't manage to pass challenges. So you don't have an issue with your discipline, with your psychology, with your risk management if your goals are already totally unrealistic and unachievable. And that's why in this video I'm going to give you 5 reasons why your goals might be unrealistic, and of course always solution of how you can fix that so you can become a better trader, but not only pass the challenge but become a funded trader in the long run. First reason, stop overestimating your potential. Stop talking about yourself and let your actions and results speak for you. There are too many traders who believe that they are a great trader. It's not about belief, it's only about results. One trick that I used for many years and that I keep using now is whenever you talk about trading, try to think that you're talking about martial art, let's say a boxing gym. And you will see that through the examples, I'm going to keep coming back to that analogy so you can compare, and you will see that you will come to your senses. So you cannot come to a gym and you just started training 1 week ago and you keep saying about how great are you and you are ready to compete in the Olympics or in the national championship. Then you might have your colleagues, you might have your coach that will come to you and tell you to relax. Either you like it or not, you can consider yourself a genius, you can consider yourself having talent. It's better to have a positive surprise by overachieving your goals, by having extremely high goals and never achieving them. I'm all about having confidence, but I'm all about being realistic over being overconfident. So get back to your drawing board, work on your plan, fix your plan, get better, learn from your mistakes, spend the time and energy that is necessary, and consider this work as a real business. It's not because you are just here behind your laptop that you don't have to take it seriously. Managing $100,000 or up to 1 million is no joke. You have to take it really as a business. It takes me to the second point. You underestimate the importance of risk management, having a strong strategy in relation to your risk management. Again, I speak to many traders, and the reason why they fail is that they might have a good strategy, but they are very flexible on the risk management. There is no high-level boxing champion that works only on his attacks and move and doesn't work on his defense. You can be the best striker in the world. All it takes is one punch to knock you out. This is the same in trading. Once again, I will go back and forth with this analogy of martial art, of boxing, for you to get back to your common senses. You can have a really good strategy, but all it takes is a bad trade to lose everything, to reach your maximum drawdown. All it takes is a bad position sizing for you to realize that you over leverage yourself, but it's already too late. There is a news volatility and you lose all the profit that you have made. Then you have all the frustration, all the emotion, blame it on the psychology. No, you had a plan that you had to implement, that you had to monitor, that you had to pause to review it. And if you follow that circle, then you will see that there is no place for emotion. Guys, risk management is a very big part of your trading. This is the topic of my first video, and that's why I insist again about it. Take the time to work on your risk management. Worst case scenario with a very strong risk management is that you will fail to pass your challenge very fast, but you might reach it at the end. But without a risk management, you're just gambling. The third reason why you have unrealistic expectation is that you simply didn't put enough work for the expectations that you have. So once again, it's different from the first reason because you might not overestimate your potential. You come very humble, but you think you are ready when you haven't spent enough time in the chart for you to learn, for you to master different aspects of the strategy and how you can protect yourself. Let me give you an example. It's not about a matter of years. I'm speaking to traders that they have 5 years experience in the market, but in those 5 years, they spent a lot of time reading, they spent a lot of time studying indicators, they spent a lot of time chasing robots, they spent a lot of time listening to gurus. So then the amount of time that they actually spent working on their own plan, working on their own strategy, working on their own discipline, and finally working on their own risk management strategy is not even 5% of the overall time that they spend trading while having Netflix on the side, while speaking to people. I'm gonna give you a little story. I used to speak to a professional trader when I was just started, and he was telling me, how long do you spend in front of the chart? And I used to tell him maybe 2-3 hours every day. And he was like, show me what you're looking at. You're looking at the indicators. You're looking at this robot. You are not looking at the chart. I told you, how long do you spend in front of the chart? You know what you should do? Keep the chart naked, learn about price action, and then put it, for example, on your TV. Even your mobile, your laptop can be connected to your TV, or keep your laptop on the side and look at it every single day to get a feel on the market. It took me a lot of time to understand. Initially, I thought it was a stupid idea, but then I understood. Did it ever happen to you that you watch either a funny movie, or especially a horror movie, or even an action movie, and you're like, yeah, this guy's gonna jump from the plane, and then he actually jumps and you're like, you see, I told you. Why do you think that this is happening? You cannot predict the future. You're not that much of a genius, but you watch so many movies that in your mind, you made an educated guess based on the parameter that were shown. You couldn't say that he's gonna jump out of an airplane when you saw him in the train. Well, obviously he was in a plane. Obviously that was a James Bond movie. Obviously you know that some crazy things are happening. So you said he might jump off the plane or whatever, or this guy is gonna get killed in that horror movie. Once you start to have the feel of the action in the market, especially when you look at specific pairs, that's why I don't change pairs every day. You look, for example, at the euro dollar, or the sterling, or the dollar yen, or the gold, for example, and you look at it every single day, and then you will see that one day you will like, I can sense a breakout here, and then the breakout happened, and you will feel good, and then it will happen more and more again, and you can continue trading. You can develop your plan, but make sure that you spend also enough time working on your strategy, working on your feel of the market, learning about price action. You might not be a price action trading, but it doesn't matter. You always trade the markets, and what you look at are the chart that are moving, not the indicators, not your robot. These are the charts. Make sure at least that you understand them. Then on the fourth reason, it's a summary of what I said previously, is that you have no plan. You wrote 3 rules on a piece of paper and you're like, okay, I'm ready. So first of all, I'm looking at this pair. I like to trade on this time zone. Let's go. That's not a plan. A plan needs to include the time frame, the time zone, your entry exit point, your volume sizing, your risk reward ratio, your stop loss and take profit or maximum drawdown for that particular position or basket of position. And once again, I speak to many traders that they have a kind of feel of the market. They go to the euro dollar and they're like, okay, now let's open. And one day they open with this volume and one day they put a stop loss here. If your strategy is to put your stop at a certain level below the previous support or the previous resistance, at least write it to make sure you respect it. Same thing for your take profit. If you try to have a risk reward ratio of 1 to 2, you will be surprised how traders talk to other traders and tell them, yes, I have a risk reward. They don't even implement it. Make sure that your plan is written. For a long time, I had this sentence in my wall. That's why I repeat it all the time. Plan your trade, trade the plan. And last but not least, it's also very important. Unfortunately, you are still to blame, is that you follow the wrong people. If you are going in a boxing gym and you saw some kind of Chuck Norris, Steven Seagal style telling you that he can move people through energy, those people are memes in social media. And most of the people laugh at them. Nobody can take them seriously. I don't know what's going on in trading. You have people showing their chains and cars and flashing their mobile with big positions, and it looks like it's okay. I always say, this is a sentence that my father was always telling me, you will always get what you deserve. If you want to follow some gurus, then maybe it's because you consider yourself as a trader. But if you want to take the thing seriously and put the work and prepare your plan, work on your risk management, stay humble, focused and disciplined, you will see that automatically you won't want to follow those type of individuals. You won't get fooled by the money, by the flashy things. And with time, you will pass the challenges, you will become a funded trader, you will reach whatever realistic objective you set yourself to reach. And as always, I wish you all the best for the trading, and I will see you soon for the last video of this series. Until then, take care and have a good trading.